Good morning, ladies and gentlemen. This is Butch Shorak for Options University. Market Recap Friday, February 3rd, 2012. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. With that in mind, let's talk about the week that was this week. Here we are, Friday morning. 4 of the days have already gone by, and we see that we are in earnings season. And MasterCard beat expectations for the 7th straight quarter and was up 6.7% this after earnings. Green Mountain Coffee up 23.9% as it ground up higher earnings than expectations and gave a strong forecast going forward. Qualcomm up 2%. It's led the tech sector with its highest prices in 12 years as it trounced earnings and gave strong guidance going forward. CMG missed. Chipotle missed by about 2 cents and was being punished as it was down about $7.59 for the day. A handful of retailers had strong results, even though only half of the 20 retailers covered today actually posted same-store sales that exceeded expectations. We see that Gap was up, Target was up, Costco was up. Well, they were among those that had more impressive results, while the more conventional department stores such as Macy's and Nordstrom's were among those that disappointed. We are still in the midst of earnings season. The financials have already reported, and we'll see that these will keep trickling in, and these will provide for us for the coming days our market leaders, and they change with earnings. It's one of those things that really can change the whole complexion of a stock. Economic announcements. As we looked at the week, we had quite a few economic announcements this week, as we can see by the number of boxes that we have on here. The most important of these announcements that took place this week had to do with jobless claims, which absolutely beat expectations, and the most important is yet to come. As we look at Friday morning, we have at 8:30 the employment situation. And when we look at the employment situation, we have certain expectations. One of those things that we're looking at is right here. We're looking for that employment number, which the consensus is expected to be around 8.5%. Follow through on that number or beating of that number is one of the things that is fueling the economy as we speak about the economy. Recent economic data is suggesting that the economy is a slow but steady path to recovery, and remember that the market supersedes the actual economy by about 6 months. So as we can see, we've been having quite a bull run. We're up more than 20% from our previous lows. This constitutes what we call a bull market. We haven't had much of a pullback as we look at the S&P, and we see when we're looking at the chart, looking here at a 3-month chart, we see that since November we've been in a steady uptrend. We've had only one pullback, and that was in this area right here, and then we haven't had a pullback that worth talking about for the last from about 1200 to 1333. So for about the last 133 points, we've been doing nothing but going up. We have, however, began some consolidation here as we took on the last 10-11 days, and it continues in that manner. All right, and that is our trend, and it will continue until it ends. So let's take a little close-up looking at a 1-month daily chart. We see that we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days where we've consolidated, and we're now moving within a very tight range here from 1300 to about 1333. This took place after the Fed meeting, which was garnered as good news, and you see we're still in that same area. So we see that for the last 11 days we haven't had much change take place, since the Fed meeting, and we're just consolidating to the right. Notice that we have somewhat of a stair-step pattern as we look here, stepping up. Here we've got this area here, moved up into a little higher range here, little higher range here, and if the trend continues, we'll be looking at a higher range up here. If the trend doesn't continue, we'll be retracing, maybe down to that moving average, but so far the lowest we've gotten is right around that 1300 point. So the market keeps marching on as we have this underlying bullish trend that just keeps grinding and grinding and grinding as we've gone into the new year, albeit on low volume, nonetheless still grinding up. The VIX during this particular week has not done much. It is also going sideways, and we see that we're below this 20 mark, which is historically our more normal zone to be in, versus when we went through last summer where we had that extremely high VIX and was fighting the volatility in the market. All right, with that in mind, if we look at a 5-year chart, we're looking at a 5-year chart. Each of these candlesticks is worth 1 week. We see that we've developed a triangle during this time, and on the 5-year chart, we have just, in fact, let's look at a little bigger chart. Our triangle looks something like this if we connect the lows, and we've got the highs, and let's look at a little closer chart. And what we'll see when we look at that closer chart is we'll see that we have just broken up through that trend line to the top side. So do we have more room up above us? Well, we certainly have more room if we look at the last 5 years. We also have more room here if we look at the last year. So there's more room up above us as we see this 5-year chart has definitely broken out of that symmetrical triangle. So with that in mind, and the underlying company, our underlying companies and bullish trend seems to be continuing as we continue in this up zone. We're looking at a chart here of a 1-year chart, and we see above us we have other areas of resistance above us that we still have room to the upside, where our most recent resistance is sitting right about there. So for those of you that have gold, we'll go into more details on where we expect the SPX to go. Meanwhile, for the last 11 days, we've been doing nothing but go sideways, and you see that we're still in an upcycle as we're getting near that next point of resistance right there, which is at 1333. All right, here's yesterday's actually. The last 3 days. This is Wednesday, this is Thursday, this is Tuesday, Wednesday, and Thursday. What I want you to notice is this very, very tight range where we're speaking about a range that basically involves less than 10 points. Remember, when you have a market functioning, you'll get compression, you'll get consolidation, you'll get contraction in your range, in your price range, and always after contraction comes expansion. So we expect that we're going to be seeing expansion as time goes on here, and we expect it might not be tomorrow, it might not be the next day, but we know as this thing tightens up tighter and tighter, it's like that rubber band on that little model airplane you had as a kid. The more you tighten up that rubber band, the further that airplane's going to go. So we're tightening now, and we will get a move either one way or the other. If the trend continues, it will be to the upside. If we have a change in trend, we'll be pulling back. Notice on Thursday we had an inside day where we didn't go higher than the previous high from Wednesday, and we didn't go lower than the previous low from Wednesday. So Thursday ended up being an inside day, and we'll see where Friday gets. What will move Friday? Well, the big thing we'll be looking at will be those employment numbers that are coming out at 8:30. They are the kind of numbers that can move the market. Looking for about 8.5% unemployment, and that certainly is down from where we've been. And in better numbers there will definitely increase our chances for the market going up and continuing in that manner. All right, with that in mind, we've got stocks that we're going to watch for those of you that are in our gold class, gold membership. We'll be looking at the SPX, what we think it's going to do tomorrow. We'll be looking at Apple, McDonald's, Nike, and W.W. Granger, ISRG, which popped 20 points. We talked about that last week, so it finally made its pop up through resistance, and now what was once resistance now becomes support as ISRG broke up on huge volume. Netflix, Google, and we'll be adding one new one to our list of stocks to watch. So with that in mind, thanks for spending this time with us. Gold members, hang on as we'll continue on in just 1 minute.